on Tata Motors. But let's welcome Aditya Sood, fund manager, InCred Asset Management, who joins us on the show. Hi, Aditya. Good afternoon. Good to see you. When autos, everyone's revving up the engine. How are you all approaching that theme? Is it the core OEMs? Is it the auto ancillaries? Or is there some other way you're playing it?
So as you rightly mentioned, there are three ways you can play it. Possibly, you just miss the dealerships, basically. So we are very well aligned to auto OEs. Obviously, that includes Maruti and Hero Honda. We like both the stocks. I think so. The underlining theme here also seems to be the pay commission, as in when it comes. Obviously, that is going to be a 4.5 lakh crore sort of a number that flows down. What we have seen is that, typically in a pay commission year, all the consumption categories do, reasonably well. So whether it is two-wheelers or small cars or the ancillary companies as well. And that includes, some of the companies which are doing or which are pivoting from, doing auto ancillary and now pivoting towards, essentially doing high precision components. So that is a theme that we like. And dealerships, obviously, there are two plays, which is Landmark and Popular Vehicles.
Do you own Landmark and Popular Vehicles?
Popular we do own, because we want to be aligned to Maruti. We believe that the pipeline is very, very strong. The stock was got IPO'd, it made a low of 80 rupees very recently, got listed at a 2,500 crore market capitalization. I think so what we like here is that, they made a very interesting pivot towards service income, which is a very, very high return on capital business. And obviously, last 12 months have been very, very tepid. Possibly they were losing money by clearing the inventory, and inventory is not, it doesn't become, 90 cents to a dollar in this business. Possibly it becomes, 95 cents to a dollar. So we like their consolidation play. They are, trying to consolidate the industry. Recently, they acquired a dealership in Telangana, which will add, a lot of revenue, and growth is something that the street has been trying to figure out. But we believe that possibly in 2027, growth is going to be, back with the bank. Possibly, they'll end up having a 20 to 25% growth because it is going to be a combination of inorganic, organic plus pay commission, as I, sort of outlined.
Its issue price was 295, right? Closer to 300. So it's halved from that level.
Yeah, so that is where, a lot of these IPOs become very, very interesting, to us, wherein they become, possibly value buys at some point in time. It is a company that does 5,200 crore market revenue. It was trading at, 700 crore market cap. I know that, it is a small cap, but, that is where we become, slightly agnostic in terms of, buying value plays.
And just one more word about Populars. When it came out with the IPO, you said services was about 15% of their revenues. The after-sales market and services. Now, what does it stand at?
So it is similar, the only thing here is that, it is growing at 25% CAGR. So a lot of emphasis post the private equity player, which happens to be Banyan Tree in this case, to grow the service income. So there was a deliberate effort. But what also needs to be noted is that, this is a 100-year-old dealership business, in Kerala, and now they are moving out of Kerala. So they've got great reputation. And Maruti car, typically, the service is like 4,700 rupees, 2.2 services to be very precise, in a year, essentially. So our view is that, they are very, very competitive if you compare it to the mom and pop sort of, service, shops. So this is what we like about them. Obviously, it will continue to be a higher margin trajectory for them over a period of time. So in the previous cycle, they peaked at 5 to 6% EBITDA margin. I think so they would be at a much, much higher ROC number going forward.
Okay, all right. Aditya, anything new you'll have bought in the last, since the last time we spoke, on the last couple of months or so? A new idea? You've told us in the past, about Tejas Networks. You believe there's a longer-term potential out there. I think we've spoken about Indra Prasad as well. That's the hospital chain. Anything new?
So, Nigel, to be very frank and honest, one of our, views is that you buy great companies, when they are going through this 3-year period of zero return. So we have just invested into a company known as Ethos, which is the largest luxury watch retailer. They recently did a fundraise on Ethos Lifestyle. We believe that luxury is a theme which is a multi-year theme. We are just starting that theme. If you look at the Ethos stock price, they have just stagnated for last 2.5 years. The stock has delivered zero return. What is underlining here is that obviously they've got the watches have got great pricing power. Currency has really hurt them, which is the Swiss franc to the essentially rupee. Which is, incidentally catapult to, 112. The Indian currency has taken a knock. They are in the process of, sort of passing of all the, price hikes. I think so next 2 quarters will be done. Same store growth is very, very strong. It is possibly trending at, closer to 15%. The growth is like, closer to 25%. So within consumption basket, either we like the top end, which is the luxury sort of the segment, and or we like the bottom up sort of a story, which is low unit consumption. So I think so Ethos with a very strong franchisee, diversifying into the lifestyle brands in India could be a multi-decade play going forward. A very, very simple way to play luxury in India.
Got that. Ethos, when we last spoke to you in August, it was, when the heat of the 50% tariff was being felt on shrimp makers and textile makers. And you always look for value wherever stocks have fallen considerably. And at that point, you said that we'll, analyze it. How are the stocks looking? Have you made any purchases in either textile names or in the shrimp manufacturers?
We have not, but we continue to monitor this space very closely. The only thing is that, I think so the market is, and stocks have, both these pockets have moved up considerably. I think so the market is trying to preempt a trade deal here. But we believe that, there is going to be some period of distress, and that is why, we have not built a position till now. I think so there is going to be, at least in the textile space, I think so this is very, very clear that this is going to lead to multiple opportunities in terms of M&A. Obviously, a lot of listed players know how to switch on and switch off. We have been talking to some of the unorganized players here. I think so the pain is going to be immense. At least it is going to last for another 6 months. I think so next quarter is very, very critical. We are expecting a trade deal to happen, between November and December. There is an element of pre-shipment which has gone through in terms of textile. Another thing that we are monitoring very closely in a lot of these textile players is that whether they are in a position to, develop a alternative base. Like, for example, Gokudas has got something in, essentially Africa. So we are trying to, just figure out that, whether they can significantly ramp up. Obviously, it is not going to happen overnight, but I expect a lot of consolidation in the sector to happen. Now, in shrimps, it cannot happen by the structure of the industry where we are. But I think so Indian shrimp is still very, very competitive. And if there is a tariff deal, which is closer to 25%, obviously a lot of these shrimp stocks should also do well. Avanti is a clear-cut winner to my mind there.
Great conversation. Aditya, thank you very much for joining us today. Let's talk about one more sector, which